Hello, hello. How are we feeling tonight, guys? I'm constantly testing with the bot with the sound. I'll get it someday, guys. Don't worry. I say that every time, but I'll get it. I'll get it. I believe. Did anyone trade today? I did not see anything posted in the executions channel, which at the point of this Discord is not something that I should take notice of necessarily, but usually when not a lot of people are talking, it's because it wasn't a very good day for most, right? That's just generally in the trading space. All right, nothing for you, Emil. Anybody else catch something or possibly did not catch something or even got stopped out? That's why we're here. Saying those things out loud makes them sound a little less worse than how you make them out to be in your head usually. All right, I see a lot of I didn't trade today. Well, that's why you're here, right? I'm going to show you what you could have traded today. So just starting off directly, a quick update on what we were talking about in the midweek analysis. We're digging into the order block, and if I would just look at NASDAQ, I'd say still uncertain. But when I turn around and I look at ES is deep within the range. It's in deep premium right now, showing no sign of respect. And as I said, once we get up here, to me, there's no stopping because this is all low resistance, right? And as you can see from ES, we're far from main threshold of the order block. Had a little reaction here, but we respected our bullish array and we're pushing higher. So at least for me, tomorrow, I'm going to be looking for higher prices, but there is a possibility for what? Well, we're Friday, right? TGIF. So I'm also going to be allowing for this SMT to push price lower. Where to specifically? Well, 20 to 30% retracement of the week. But as you can see, if I just mark this out, we're already here. So I pretty much need to see it make a new high, but then no SMT would be present unless ES goes all the way up here, which I don't see ES doing on a random Friday. Well, 54 handle range. It is possible. Yet to see, but it is possible. But less about tomorrow, more about today. So I'm gonna dive right into my 4-hour chart, because for me that's what was clear today. So if we look right here, this is my 10 a.m. candle. So before that 10 a.m. candle was formed, I called it out in Discord briefly. I was looking for higher prices, right? This to me was very clear. We had equal highs on ES right here as well, but I was expecting ES to go all the way up, allowing NASDAQ not necessarily to have to go past its 4-hour high. And as you can see, all day we did not until now. We barely just took out this high, which lower time frame was relative equal highs, I believe. But seeing how weak NASDAQ was to the upside was not very enticing for me at all. But I still trade NASDAQ. So I'm going to move into ES a lot more, but I never traded micros on ES, and I just made the full switch to micros. So I did not want to get into something I was not familiar with on my real accounts. So basically I decided to trade NASDAQ, be happy with less. And as we dive lower into an hourly chart, I'll show you how. So you can see here our weekly and daily power of 3, right? I'm just going to show it off so that you can also see ES, which the offset is pretty weird. Okay, it was lagging. That's why. By the way, if you use any of 2 degrees power of 3 indicators, sometimes they are super far off because it has a hard time with aligning with TradingView. Just zoom out just like I did, zoom back in, and you'll see them align. But enough talking. To get right back into it, what is the first thing that jumps to mind for me is what you can see right here, right? See how our 8:30 news. So this is our 9 a.m. candle, sorry. So this is the Judah swing lower from the 9:30 open, but our 8:30 news pushed us higher. So you would anticipate lower prices, but then price bounced back. So why was I looking for longs even though we had news clearly tell us that we were going up? Well, we had another news in the PM session. So I wasn't looking at it as a long-term Judas swing. I was expecting our morning news to just start going in one direction and then the second news to adjust based on our drawn liquidity, which we saw. But more specifically, what I wanted to bring your attention towards is that there is no SMT here at all. Even if I look all the way back here, there is no SMT on the lows at all. So was it a high probability move? Well, not from a higher time frame perspective. And if we look with the relation of the midnight opening price, so the open of our candle, you'll see that it was super clean, right? What did we do? Well, we expanded below midnight open, manipulation of day, before expanding higher for distribution. Once we dive down to our intraday time frame, there was SMT, right? If we look right here, you'll notice that our 9:30 opening Judas swing pushed us towards lower prices, and if I'm not mistaken, it was this exactly. So we did have SMT between both our correlated assets, which led you to believe that well, ES was stronger, and as you can see, ES clearly outperformed. You had beautiful relative equal highs right here. That would have been a nice low-hanging fruit objective, with your final objective being the 4-hour external range liquidity, which I pointed out right there. Sorry, I just had a call, just had to mute that real quick. If we concentrate on the order flow of our 15-minute chart, I don't want to say higher time frame, but it's higher than 1 minute, so technically higher time frame, right? You'll see that the only clear displacement always happens in a discount. So I'm going to draw out ranges for you guys right here. I'm going to first draw this one, right? And what do I see? Well, there's no discount in efficiency except for this high probability order block. And yes, with such a big top wick, it is still what I'm looking for. And if you look at all the alignment right here, yeah, there's an inverted fair value gap. There's your high probability order block, sorry. And you have your fair value gap right here, and that got respected and pushed us higher. But what I really wanted to point out your intention to is see how high resistance we were after this expansion higher. So we had a first expansion past midnight open. So finally trading above, as you can see right here, we could not, but then we traded above. Then you had a manipulation lower that aligned with your 10 a.m. power of 3 before pushing you higher. So you had everything present for a setup. You had your SMT was in line with higher time frame power of 3, accumulation, manipulation, distribution, SMT confirmation. All your higher time frame narrative was there. You also had a 4-hour internal to external. What internal? Well, I had this order block. This candle retraded into this order block. So that to me was more than needed. And my objective would be here still because what? Well, this fair value gap right here. We're trading inside of a 4-hour fair value gap. And if I go on a daily, that's daily internal to external, right? As I said in the midweek analysis, that was one of the possibilities, and it was all going to be framed around SMT. I had no higher time frame SMT. So what was I doing? Well, I was scalping with my intraday SMT. I'm just reiterating what I was saying to just bring it back fresh to your minds. But now we can dive into 1 minute chart. And if we look at this, why do I still have power of 3? I'm going to remove the power of 3 very quickly so that it doesn't mess up my charts. And we're going to go see what happened in the morning session. Might be a little hard for you guys to see, seeing as I don't have any session indicator on, so I'll be drawing some stuff. This right here, this little tiny piece of time is the 950 to 1010 macro. And as you can see, that's where your move happened. That's where your move happened. I'm just going to try it out like this. There you go. So very clearly, it was a waiting time. And we formed a beautiful unicorn entry right there. So I'm going to mark it out. And yes, my model video is coming. Don't worry. It is on its way. I'm going to mark out the breaker block right here, which is a high probability breaker block engaging with 2 stages of liquidity. And forming SMT at this level is additional confluence. Sorry about that. You have your breaker right here. I'm going to take a sip of water real quick. And For a unicorn, what are you looking for, right? You're looking for an overlapping fair value gap. So at the time that we formed this breaker, after trading above this high here, I'll draw it out for you guys and also for myself. After trading above this high, we're forming a breaker. So then you'd look for retracement. Well, you had this overlapping fair value gap, a little below, all good, but you did not need it to go there because you had your inverted fair value gap right here. And as I tell my students to do, you would include the volume imbalance to the inverted fair value gap, sorry. As you can see, I'm going to remove the premium discount real quick. We closed above right here. This is the high of the fair value gap. Retraded into it, aligning with your fair value gap right here. Just real quick, I'm gonna confirm that you guys can hear me. All right. Kaylee. Sorry, I'm just answering something. Try control to refresh Discord. Someone couldn't hear me in the call. Sorry about that. All right, but to get back to it, inverted fair value gap, alignment with the fair value gap right here. And yes, my breaker is far, right? You'd look at this. Oh, all right, perfect, Kaylee. Nice to hear. You'd say that if you're looking at the inverted fair value gap like this and you see the breaker block, you're like, oh, well, that's too far for me to justify an entry based off of this. Well, no. Why? Because to find the true consequent encroachment, you would include that volume imbalance. And you can see it, you have it right here. As well as the fact that, hey, my breaker is not just this, it is this complete range. So yes, in my 1 minute chart, it looks like this, but my breaker is this complete range. And I'm utilizing the last up close candle because of stuff I will not explain right now. We're not going to get into the market mechanics of what forms an actual breaker blocks through orders, but to keep it simple, you have it right there. And then you could have entered either straight on the inverted fair value gap, as I did personally. I had my first entry right here. Then I scaled in once I saw us dig back down into the fair value gap right here. And then added money later down the line. We'll be looking at it. But entering here, I want to point out that where would your invalidation level be? Well, it would be at the low of this order block right here. So you would have gotten stopped out, but not before achieving at least 2 risk to reward. And that's with the worst entry, right? The best entry is right here. And then your stop would be, you could utilize this inverted fair value gap, but I wouldn't. I would allow for it to trade all the way back down here, sorry. But then again, that's quite a large stop that I'm not always so comfortable with having it reach all the way back. And if we look at the risk to reward all the way to this external, you're only getting 2.42 R for 70 handles, which is fine, but is not the best, right? So for me, taking a look at the worst entry, which is my first entry, was on this inverted fair value gap, utilizing this order block low as a stop loss because I was expecting this to stay open. Again, you don't need to understand that if you utilize a 3PD array rule, which I'll be going in depth into in the video. And then what do you use? Well, standard deviations and premium and discount to find a low hanging fruit objective. So this was my final objective, this external buy side liquidity. As I stated, right, it's the same one we're looking at in a 1 hour chart, I believe. It was the high of the previous 4 hour candle. I just want to point it out. So it was the high before that 10 a.m. candle. So it was the high of the previous 4 hour candle. Just wanted to show you guys very quickly. But then what's my low hanging fruit objective? Well, I'm looking at the first premium inefficiency, which would be this order block. But as I stated previously, like in the last call, I like to go for a 5 minute to have a clearer picture. And it's only because I go into that 5 minute time frame that I see that, hey, this fair value gap, which the 1 minute order block is a part of, is not a premium inefficiency. If I utilize this range, it is. But if I utilize this one, it isn't. And since my objective was higher, all the way here, I wanted to use the range that I want to see broken, because I believe that's the range we're going to trade into to get up here. And that comes with experience. That comes with confidence of your drawn liquidity, again, through experience. But looking at all this, my objective was this fair value gap right here as a low-hanging fruit. So I'm going to mark it out in purple so we don't get confused. Well, so I don't get confused. And as you can see, what does that kinda line up with? Well, I had the liquidity here into this order block. So this order block can be a great take profit. And as you can see, actually, we did not reach the liquidity. But I never like seeing this. Oh, see my low-hanging fruit. That's hindsight, right? I don't like how too clean this looks. Oh, it reversed right there before retracing and continuing. That's too clean. So let's just be pessimistic. As I say to all my students who are backtesting, be pessimistic, don't be realistic. What is this? Well, this is a clear objective in premium that aligns with standard deviations and offers you upwards of 2R. You can make millions off of 2R. Literally millions. And if you entered with, let's just say, 3 contracts and you took out 2 there, well, you got stopped out on your last one. And honestly, after I'm taking profit, my stop is break even or higher. I'm not allowing it to retrace that deep on me. But that was a first opportunity. And as I said, you could have entered on the fair value gap and then had your stop lower, which would allow you not to get stopped out. But as you can see, there was another setup that formed. So we had manipulation lower right here. And I'm also going to draw out the 10 a.m. opening price. So if I'm expecting a bullish candle on my 4-hour chart, because I'm looking at the 10 a.m. open, which is the open of a 4-hour candle. So if I'm anticipating a bullish candle, I'm going to want to buy that wick, that bottom wick, right? If I'm trying to trade, let me just find a clean candle, this candle right here, I want to buy here and sell here. I don't want to be trading into the bodies. I want to be buying the wick and selling the top wick. So I would like to be buying under this level. And I just thought that today showed great interaction, especially with how it's not always as clean as seeing 10 a.m. open low and then expand, right? Sometimes it consolidates, which can be also called accumulation, before manipulating and then displacing higher. And if we look right here, what do we have? Furthermore, SMT. And of course, as I said, I traded NASDAQ today, so I'm only looking at setups on NASDAQ. But all these setups can be transferred to the stronger asset. The same entries, the same imbalances right here you could have entered. See, there's multiple different things, right, that you could have used. And I forgot to say that this higher time frame SMT, your 15-minute, also had lower time frame SMT right here through this low and this low. Yes. So you also had SMT between both correlated assets at this low. You know what? I'm going to draw it out. Going to have a lot of makeup on this one. But if I look specifically here, we have SMT. We have the break of this low, which is your manipulation before displacing above the high of the same range, which forms another breaker block. A breaker block and a breaker block. And what is that? Well, I would qualify that as a continuation entry of this. But it is just another setup followed right there. And you're still in the premium of your range. You're still aligned with power of 3. You just had to have a deep retracement first. And if we look at specific retracement levels, like OTE, for example, this was super clean, right? We retraced where we needed to. And if you look at a 5 or 15-minute chart, which, you know what, why not? I was just going to go over it quickly. But the low that was formed, where was it? It was 10 a.m. So no, it was a 5-minute chart I was looking at, I'm guessing. Yes, right here. Just traded back into an order block and fair value gap balanced price range while respecting all of them. So you were still aligned with the direction and you had a way cleaner unicorn, if we can say it like that, and you would have entered right here, and then fair value gap, inverted fair value gap, and is that a fair value gap? No. So next one is order block. So stop at the swing low, same objective, which doesn't allow for 2R. So just quick insight, when my setup doesn't allow for 2R, I don't trade it. But if it keeps retracing lower, it's still the same setup. So I'm just waiting. So at this point, I'm like, oh, I'm not even mad. I can't trade it. It doesn't allow me for enough risk to reward. But then it starts going down deeper and deeper. And oh, all of a sudden, it dug deeper into the fair value gap and now allows for 2 risk to reward. I'm entering right there. I have the same stop as before, but now it's tighter because it's retraced deeper into my range. So that's the kind of stuff that it allows when you're, well, it takes, I'm thinking of the best way to say it. You just have to be very much concentrated. So it takes experience, I guess. And when you're always thinking about those things and you're looking at, oh, well, my minimum framework is not good enough here. Okay, let's wait to see if it retraces deeper into that one. Worst case, I miss a small move that I would not have made barely any money on, not enough to be profitable. And best case scenario, it retraces a bit deeper and I get my setup and I'm happy, right? Which you had right there. For myself, I scaled in here. My stop allowed for it to trade all the way back down to this volume imbalance. I'm not going to go into detail why. My stop was at the low of this candle right here. And then I added money along the way here. I'll send the execution picture. I don't want to be searching into my photos while I'm on a live stream, but I can send the execution picture in chat right afterwards. And if we keep going, right, as you can see, we clearly move forward. And as for the PM session, to me, there was nothing clean. I'm not going to get into, oh, there was a setup right here, or there was a setup right here. Because the truth is, if you're trying to trade during this, you're getting stopped out 10, 20 times before getting your right setup. So the best way to avoid losing money in conditions like these is to understand how the market works. We expanded beautifully in the morning. We had another opportunity short, but I'm not going into it because I don't recommend traders, well, at least beginners, to be trading pre 9:30 open. So I'm not going to get into how you could have shorted this move. There's no point. And even at 9:32, 9:31, I don't care about that. I recommend not to be trading before the 9:50 macro, which is the real move. Why would you want to take part into the manipulation if you had access to the distribution? Which there is valuable insight, right? You could have traded both. I'm trying to be realistic and I'm trying to be inclusive here. Not everyone has the mental ability or psychology to be looking and being able to trade both sides of the markets at the same time. That is something that is very hard, and it's very easy to make this flip the switch of, oh, well, all of a sudden I'm just clicking random buttons in any direction and it's 50-50. You know, it's very easy to get into monkey mode, if you want to say it like that, just pressing buttons like a maniac. So, all that to say, I really do not recommend it. Very much not. To people who have, I mean, under 2 years experience, for sure. But to get back on track very quickly, yeah, exactly like that GIF, Matt. Same thing. Buy, sell, buy, sell, buy, sell. That's it. But just getting back into it, if you would have waited right here, and you also had 101 news, which gave you a due to swing higher, with not taking out this liquidity. So if you were still bullish, that didn't make sense, which you would be because this is your daily external range liquidity above right here, which I'm actually going to mark out for tomorrow anyways. So I'm going to mark it out right now. So you had your daily external above. So you were bullish until this internal to external move completed. And this consolidation did not give you anything worthy. And just by looking at what happened in the morning, you could have understood that you wouldn't be trading the afternoon. I have a very much more simple way. If there's a setup in the morning that you missed, then don't take part in the afternoon. In the same direction, of course, but it's just when you got to think, I entered first right here. Once we're here, I'm already taking profits. I have break-even runners. I'm chilling. So that's who you want to be. You don't want to be the guy trying to get in late right here that missed out on this value and is only able to catch a small amount of value with no clear objective up to this level, which, as you can see, we just induced, and then went to go get after market, right, during Asian session. So nothing was too interesting for me in the afternoon. So again, I'm not going over it. But on that note, that's everything I had to say for today. Did we have any questions in the audience? Again, not seeing any questions. Guessing it was all clear. Sir, no, sir. All right, that's what I like to hear. Well, I wish you guys a great night. We'll be seeing it ourselves tomorrow. The event is available at the same place as usual. So I'll see you guys tomorrow. Have a great night, guys. Talk soon.